Yesterday, the Adani Group stocks were in focus based on a report that alleged that NSDL has frozen 3 FPI accounts which hold Adani Group shares worth more than 40,000 crores. Based on this news, there was of course negative reaction on the stock, and Adani Ports and Adani Enterprises at one point in time declined more than 20% before recovering and closing 10% lower as well. Now this was post the clarification that was issued by Adani Group. During market hours and post market hours, there was an official communication that we received from NSDL as well, wherein it was stated that the 3 accounts of FIIs which were mentioned in the news report, the status of those accounts was indeed active. However, during that time, Adani Group stocks lost more than 50,000 crores worth of market capitalization on a combined basis. Now 50,000 crores is a big number if you look at it, but if you compare it on a YTD or a 1-year basis, then it looks considerably lower because many of these stocks have been multi-baggers in this year and in the last 1 year as well. So you have Adani Total Gas along with Transmission and Enterprises, which have returned more than 3 times to their shareholders so far this year, along with Adani Power that has also surged almost 3 times during the course of the year. Adani Ports and Adani Green are the ones which have risen lesser than the others. 60% and 15% is the YTD return that we are referring to. But not only this, in the last 1 year itself, Adani Total Gas has been more than 10 times return for its shareholders, along with Adani Enterprises, which has also been a 10-bagger. And then you have Adani Transmission, which has surged anywhere between 7 to 8 times. And then Adani Power, Adani Ports and Adani Green, all of them more than doubling for shareholders in the last 1 year. Now with the rise of stock prices, the analyst target prices have also been taken out by most of these stocks except for Adani Ports, which is expected to return 8.5% over the next 12 months. Adani Enterprises, Adani Power as well as Adani Transmission are currently trading significantly higher as compared to their analyst consensus target price that is there in the market. But are there earnings that these stocks actually come with? So you have Adani Transmission and Adani Ports, which have a positive 5-year EPS CAGR to the tune of about 20% and 10% respectively. But the other stocks, Adani Enterprises and Adani Power, those come with a negative earnings growth potential in the last 5 years. Of course, all of this has also led to hefty valuations for some of these companies. Adani Power trades at 163 times price to earnings multiple on a 1-year forward basis. Adani Transmission 142 times, Adani Enterprises 113 times, and then you have Adani Ports which trades at a reasonable valuation of 24 times. That's probably the reason why Citi has written a note today in which they maintained a buy on Adani Ports with a target price of 1,000 rupees per share, and they have mentioned that the correction has been due to negative news flow that we got in the market yesterday, and they expect that Adani Ports is well positioned to grow its already high market share position in the market, as well as valuations on a price to earnings multiple as well as EV to EBITDA looks attractive, and that's the reason they have a 1,000 rupee target price on the stock.